price is 308, the strike price is like 240, so that's way off. It's not going to go. It's the chances of this stock going in the money is very low. I mean, that stock would have to absolutely collapse to ever go in the money. Do you understand? Because the strike price is 240. The stock price right now is 308. It was probably 320 when I bought it, right? So why would I do that, right? The odds of this thing, and I think the expiration date on this put is February 20th, 2026. So here's the deal. Here, I don't want to talk you through this so you'll understand what the thinking was. So the odds of this stock ever hitting 240 are slim to none. There's no way. I mean, I would be stunned if Oracle drops to 240. Possible, not probable. But I wasn't looking for it to drop to 240. I don't need it to drop to 240. I don't need that. All I need is for the stock to drop 10, 15%. And it's done that. And so I can sell this option right now and make, a 60% ROI on a 5-day investment, right? So the decision I have to make now is, do I want to let it ride or cash in my chips? I'll probably cash in my chips. But it's not because it's the right thing to do. I'm doing it because it's the right thing for voice. Do you understand? So don't make investing moves because it's the right thing for everyone. There are other people that would hold this option the entire time. Maybe they buy a higher priced option. They pay more. I didn't want to pay more than $1,700 for this because I don't like to spend a ton of money on speculative investments like this. I could have been wrong. This option could have expired worthless. If this stock kept going up, my option would just whittle away and eventually be worth nothing, right? So I had to think about it in terms of like, okay, how much money am I willing to lose if I'm wrong? Second of all, what has to happen before I feel comfortable enough to go ahead and roll back this investment and sell this thing to some other dude out there who wants to buy it? I don't want to own this thing all the way till expiration. Why? Well, because I don't believe the stock is going to drop to 240. I don't think this option's ever going to be in the money, right? But here's the thing: the option never has to be in the money for you to make money from it. Do you follow? All that has to happen is you go back to basic investing. Basic investing says buy low, sell high. That's it. That's how people make money. Buy for this. Oops, ow, hit my hand. Dang it. Buy for this much, sell for that much. If you do that, touchdown. You win money. You make money every time. Okay. So maybe with this, I don't know. Maybe I'll feel a little frisky and I'll say, "Well, let me just hold on to this for a while. Let's see what happens. Let's see if it drops further. Right. And then maybe I'd make more, but I'll probably sell it tomorrow if I made 60%, that's enough for me. Okay, so really, I wanted to show you that example to show you that just because you get a long-term contract doesn't mean you have to be a long-term investor. That's really important to understand. Never think that buying or selling a long-term option means you have to hold that option all the way until the finish line. Also, never think that if you buy an option with a certain strike price, that the thing has to get in the money for you to start making money. All that has to happen for you to make money is for the option price to move in a direction that is favorable to you. So, and that's true whether you're the buyer or you're the seller. And if you're the buyer or the seller, buy low, sell high always applies. So let's say that I was the seller of this option, and let's say I sold it for $5 per share. And then let's say that let's say that something happens and the price of the stock moves in a way where the option value drops to $2 a share. Well, then I can do buy low, sell high, except I just sold before I bought. So I sold it for 5. I can buy it back for 2. Did I make money? Was that a profitable move?